McDonald's is not usually a stock investors think about when they're thinking about investing in the newest, most innovative tech trends like artificial intelligence and robotics. But in this video, I'm going to talk to you and discuss how McDonald's is benefiting from these advancements in technology. I'll also review longer term trend lines for McDonald's on their revenue growth, their profit margins, and returns on invested capital. And then I'll share with you my calculation for the fair value of the stock so we can see if McDonald's is undervalued at current market prices. And I'll update my buy or sell rating on McDonald's stock. That's a lot to cover in a short video, so let's jump right in after a brief message from my sponsor.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking at McDonald's revenue chart over the previous 7 years since 2018, its revenue has grown from 21 billion up to 26 billion in that time, good for a compounded annual growth rate of 3.2%. This is about what you would expect from McDonald's. It's not a fast-growing company, but over the next 5-year period, I would expect its compounded annual growth rate to be a little bit quicker, to be a little bit larger. And the reasons are several. Let me talk to you about them right here. For one, food delivery and the advancements of companies like DoorDash, Uber, Instacart, and others that are making McDonald's more accessible, increasing the range its restaurants can serve. Already, there are roughly 40,000 McDonald's restaurants around the world, and now, with food delivery, McDonald's is more accessible in more occasions. Previously, you could only get McDonald's if you were to leave your house, and that put McDonald's at a competitive disadvantage against other businesses that would deliver to your home, like Domino's Pizza. But now that McDonald's can be delivered to your home, you're going to be ordering McDonald's more often than you previously would over the previous 5 years compared to the next 5 years. And people have proven that they are willing to pay for convenience. The revenue growth of companies like DoorDash and Uber Eats and Grubhub and others proves that people are willing to pay several dollars for delivery to their home. And McDonald's is benefiting from that trend already. Furthermore, I talked about advancements in technology like robotics and artificial intelligence. McDonald's is benefiting from those trends. In Los Angeles, if you live in the area, you will have seen these robots, these little robots that are smaller than the size of a shopping cart, delivering food to people's homes. I see them all the time in Los Angeles. That makes McDonald's even more accessible because the cost of delivery will decrease that much further. I know there's a lot of talk about driverless cars, but a whole car is too big to deliver a cheeseburger and fries. But these small robots, they can deliver cheeseburgers and fries to your home for a fraction of a cost of what a car and driver can deliver to your home. That makes McDonald's even more accessible for when you don't want to cook and when you want to eat out and when you have little funds to spend on more fancy food or more expensive food. Furthermore, artificial intelligence. McDonald's, the drive-through window, they use people right now to take your orders, and they can replace that with artificial intelligence and technology. Already at the McDonald's location next to the university I teach at, instead of having cashiers take your order, they've been replaced now with kiosks where you place your order on the digital kiosk and pick up your order when it's ready. So that makes it more attractive. And remember, McDonald's operates on the franchisee business model. That makes it more attractive for franchisees because it decreases the need for employees. Employees is the biggest hurdle for franchise development. It's the most difficult thing to manage, especially in the fast food restaurant industry, where turnover is very, very high. You're having to replace workers because they quit or they leave for another job, and so you have to replace them. And looking for workers, training them, that whole process takes a lot of time, energy, and resources. And if you can operate a location with fewer people, that makes each location more attractive for franchisees. So McDonald's benefiting from some of the most innovative trends, which might surprise investors that McDonald's is a company that you can invest in to capitalize on the advancements of these latest technologies. And McDonald's is a very profitable business, if you didn't already know. It generated an operating profit margin of over 46% in the most recent trailing 12-month period. That's more than doubled from 21% in 2005. It's becoming more and more profitable. And these advancements in technology have the ability to make each McDonald's location that much more profitable, that much more lucrative. And I expect this will continue to improve the attractiveness of McDonald's locations worldwide. So let me share with you the valuation calculation for McDonald's stock. My proprietary discounted cash flow valuation model calculates that McDonald's stock is worth $430. The current market price is $302. So I think McDonald's stock is significantly undervalued. And for investors that are looking for a safer way to benefit from these latest advancements in technology, McDonald's can be an interesting choice. I have McDonald's stock rated as a buy, and I updated that recommendation today, September 15th, 2025. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.